Everybody, good morning, good morning, good morning. Happy Friday, the last day in August. Well. We've got PCE numbers hitting the market. We're down like 40 points off of the high in the futures. That's from the highs all the way down into the, I guess, the lows overnight. And just kind of churning back a little bit after PCE came out. I mean, good, bad, ugly. I don't know. We've got Rob, Don, Will, Sergio, Donald, Arturo, Gary, Craig, Svenborn, Mad, Rob, David, Logan, Diane, Aki, Ryan, Sledge, Ted, Pauline, everybody. There we go. And all my channel subscribers, welcome to the channel too. General Rush, good to see you, sir, as always. Edward, Larry, Jan, Tara, Mark, Gustavo, customer service in the house for the publisher. Kit, and we can see your name, my man. You don't have to tell us. So, I'm not sure I said that right. That's not East Tennessee native, so you're not like a Bob, Jim Bob, Joe Bob. Daryl, mother brother Daryl, mother cousin Daryl. It's anyway. What's up, my savvy investor friends? Thanks for coming into the channel today. As always, there's a JB. My dad's a JB too. And so, Fed Chair Powell's favorite inflation number dropped this morning. Boy, oh boy. I've cooked up a doozy of a story for you this morning. So you walk into your favorite coffee shop, Starbucks, Dutch Bros, whatever it is. You can let me know in the chat which one your favorite is, if you got one. I drink Monsters. I don't drink hot liquids. So now that usual $5 latte or hot latte now cost $5.15. The barista, well, looks you straight in the face and says, "Don't worry, we're gonna make borrowing money cheaper to help you with that cost increase." That, my friends, is essentially what's happening with the PCE inflation report today. And stick around. I'll show you, talk to you about ways we could profit from this potentially. So let me paint you a picture of the way this reality show is playing out. Personal Consumer Expenditures report, that's PCE, Jerome Powell's favorite way to measure inflation. Well, core inflation just hit 2.9% in July. And for those keeping score at home, Federal Reserve has been screaming from the rooftops that their target is 2%, and we're sitting at 2.9%, which is 45% higher than the target. That's like aiming for a 70 on your test and getting 101, somehow thinking you failed. But hey, here's where it gets absolutely hilarious. Despite inflation being nearly 50% above the target, the market is pricing in an 85% chance that the Fed will cut interest rates in a couple weeks. Let me repeat that for people in the back, way back there. Inflation is too high, so the solution is to make money borrowing cheaper. It's like your house is on fire and the fire department shows up with gasoline. Now, maybe some nitroglycerin, right? Now, here's where the story gets really juicy. See, there's three characters in this economic soap opera. They're all pretty much acting completely off the rails. First off, we have the Federal Reserve playing the role of a confused parent. They're looking at inflation that's stubbornly high and saying, well, the job market looks a little soft, so let's ignore the inflation thing and let's appease Trump, cut rates. Employment growth has plummeted from 123,000 jobs per month last year, if you believe those numbers, to just 35,000 jobs per month recently. That's about a 71% drop, which sounds scary until you realize that, well, we're still adding jobs, just not as many. It's like complaining you're only getting 3 scoops of ice cream instead of 6, maybe. I don't know. Then we have the American consumer, right? Staring at, I mean, American consumers, the eternal optimists of this story, despite everything costing more, we increased our spending 0.5% last month. That's right, everybody. Prices go up, we spend more. We buy more stuff. Or maybe we just spend more money on the stuff we buy. It's like watching somebody get punched in the face and asking for more. Hello, Mike Tyson. And finally, we have President Trump's tariffs playing the role of the villain. These tariffs are literally pushing prices higher. Maybe not to the drastic extremes that some people thought, but the report specifically mentions, this PCE report specifically mentions that tariffs are winding their way through the U.S. economy. So we're artificially making things more expensive while simultaneously preparing to make borrowing cheaper. I mean, this is like somebody that is writing economic policy and never went to math school. Never took any math. Failing basic logic here. Here's the beautiful thing about this economic funhouse. There are massive opportunities if you know where to look. Let me break down the 3 biggest potential plays for you. See, first up, we have the rate cut Goldilocks strategy when the Fed cuts rates while the economy is still strong, if it is, in fact, still strong. Sarcasm abound. It's like giving steroids to an athlete who's already winning. The biggest winners are going to be the sectors that love cheap money. Real estate investment trusts are already up 7 to 14% this year, and they're just getting started. Look at ETFs like REET, that's Romeo Echo Echo Tango, or SRET, Sierra Romeo Echo Tango. Utilities are another gold mine. These companies have massive debt loads, so cheap borrowing is like Christmas morning for them. FXU, Foxtrot X-Ray Uniform, or FUTY, Foxtrot Uniform Tango Yo-Yo. Yo-Yo? Yeah. I can't remember the Y. All of a sudden, like, pulled a whole blank. Anyway, are both of those are up 15 to 19% this year. And don't sleep on small cap value. AVUV, Alpha Victor Uniform Victor. These little guys, they're most sensitive to borrowing cost. Now, second, Yankee, that's it. Sorry. Yankee. Just pulled a whole blank on that one. Just gone. Second, we have the tariff inflation hedge play. Since Trump's tariffs are going to push prices higher, you want to own companies that can either pass those costs along or benefit from reshoring. Thinking about domestic manufacturers over importers, energy companies that benefit from bringing that production back to America, and consumer staples that have pricing power. I keep mentioning these. It's been a reoccurring theme this week. These utilities and energy producers and things like that, consumer staples. Now, third, maybe my favorite of the group, the consumer spending paradox trade. Now, Americans are proving that they're going to spend money even when costs increase. At least keeps going until it breaks, right? Which is absolutely bonkers, but incredibly profitable if you have yourself in the right stuff. Home builders are kind of a sweet spot here. Lower mortgage rates, if we can actually pull it off, plus stubborn consumer spending equals like a perfect storm for XHB, X-Ray Hotel Bravo, and PKB, Papa Kilo Bravo. They're already up 10 to 22% this year. Consumer discretionary stocks are going to benefit potentially as well, while big ticket purchases become easier to finance. And technology stocks love low rates because, well, we got to have cheap capital to keep building out the AI expansion dreams. So here's your timeline, people. September, that comes up next week. The Fed is 85% likely to cut rates. At least that's what everybody's expecting. They may do another rate cut in December. We're on a steady diet of rate cuts into 2026, meaning those tariff effects might actually accelerate into the fourth quarter as companies run out of their pre-tariff inventory. I mean, we're getting down, like they've started having to bring in, when you look at when Christmas stuff comes in, it starts coming in July and August. So we're bringing in Christmas stuff right now. It's getting tariffed to crap. That stuff starts hitting the shelves in November, December, October, November, December. Prices set to rise. So here's your homework. Start looking at positioning in rate-sensitive sectors before the September meeting. You've got a couple of weeks. Focus on real estate investment trust deals, utility deals, small cap value, home builders, technology. And remember, we're living in an economy where up is down, down is up, expensive is cheap, inflation means rate cuts, and stagflation possibly. Doesn't even make sense, but doesn't have to. All this stuff can remain irrational way longer than any of us can keep fighting against it. We just want to make money, right? The Fed is essentially telling us they're going to stimulate the economy. That doesn't mean stimulating while ignoring that inflation is 45% above the target, I guess. But anyway, it's like watching a comedy show, except the punchline is your portfolio going up. Hey, do the right stuff, right? Play the game until the music stops. That's all for today on this monologue, my savvy investor friends. If this helped you maybe understand what's going on, let me know in the chat. If not, I'll do my best to make better analogies for you next week. Until then, let's keep going, shall we? Keep at it. Let's figure out how we can make some money today. So jumping over, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So basically, trading involves a substantial risk. I make predictions, play some trades. Sometimes I get it right. Sometimes I get lucky. But if you can't handle that, don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money when you trade them. And if you want somebody to tell you what buttons to hit, well, hire and consult a financial advisor. That's what they do. So this is the last trading day of August. If you weren't aware. Monday, market holiday, known as Labor Day. I will be here doing a crypto special. Since the market's closed, typically we see 3-day weekends be strong for crypto. Maybe it's been kind of a mixed bag this year. I don't know. We'll pop it up, look at it, probably talk all the different ones, dive into it. Probably spend an hour or so looking at it, and then we're on to September, last month of Q3. Last month of the EV tax credits. We'll see what happens. That Fed rate cut decision coming in here on the 17th. 2 p.m. right there. So you got a couple weeks to prepare for that. And S&P 500 opening a little soft. We were up here. We got down. ES overnight, like I mentioned at the start, we bled down about 40 points. High to low. Off of this guy right here, down to this guy right here. Yeah, 34 points. Rounding up. And we're coming back up. Popped on the PCE. Can we take it back higher? That is the question. We got darn close. Get darn close to the target up here. I told you I kind of expected this to make new highs after this price action right here. New all-time high. That's what we got. Can we take it on up to the target? That 65.60 area. 65.50, 65.60. It's been the target for, gosh darn, basically since we blasted through the 127 or 1.1448. Excuse me. 90% of the way to the 1272. See, back here when we came up through, right there, despite my really thinking we get a bigger pullback, kind of set the stage. 70% likely to hit this number right here. 70% likely to hit this. Haven't hit it yet. just based on the price patterns over and over and over, 70% likely. Once we did that right there. I thought we'd do a bigger pullback. Didn't do it. That's typical price action. I kind of follow typical things in the market. I've been putting statistics to it a lot in my more recent years of doing this guru stuff. When I became a guru, I had a lot of theories, I had a lot of market experience, but I didn't have a lot of solid numbers to my price patterns. And by having followers and people like you, it's allowed me to build tools that I never had the time or energy or effort or resources to build, and start putting numbers to this stuff. And we've kind of proved out that this hitting this level was almost 75% likely. We did that. We hit it right here. Hitting this level, 70% likely right there. What's crazy though, hitting this level is 35% likely. So the probability drops 50%, if you will, from here to here. 50% of the probability. So we could experience a pullback, and we could find a level in here somewhat higher, and then that'd be it, and we never get to here. I just want to warn y'all, like, if you're eternally bullish, thinking we're going to the moon, never looking back, never gonna go back, never gonna however that song goes. Be careful. Be careful. All right. Looking at the small time frames. We're cooking. Cooking with gasoline here. Pushing through the 15-minute. Take a look at a gander at the 30-minute. Load, please. Nice and slow. I love it. Not. Yeah, we bounced right off the 30. Look at that. Bounced off here. New highs. Bounced off here. What do you expect? What do you expect? Well, what to expect when you're expecting. We go high. We go low. Here's the resistance. Got to clear. Give you the levels. 6510 on ES. This is ES number, not SPX. 6510. Sets up the move. 6528. Right there. Same price pattern, 30-minute time frame, SP 500. Now, if we reject, where might we go? Where might we go? Get the words out in the right order and don't mash them all together. Mash mouth, mush mouth. So if first move down, if this develops into something bigger and I need to turn off that stupid tool, magnet tool, if we copy that move off of that resistance, this is the target on the downside. Feels like we've been there recently. Oh yeah, just a couple of days ago. Look right there. So if we bounce off of this right here, that's an A, B, C. Absolutely beautiful correction right there. Potential. And that would be the target zone for a bounce. Although if we get extra crispy spicy, might see further downside. And if that doesn't hold, could retest this area down here. If that didn't hold, well, things start looking bad. We've got this kind of, drew it on the SPX chart. So we got this level, these layers down through here. We start breaking down through key support. Got that one and that one and that one and that one. You know, we tear down, and we tear down, not tear, tear down pretty fast, and things could get really spicy if we develop bigger pullback for some reason. Everybody's like, so many people are telling me like, You don't understand. You know, there's not another big event coming that's like the tariff freak out. Well, the tariff freak out started, like, the tariff freak out was just the end part right here. Like, what was that right there? We already started the correction and set up the move way before Liberation Day. It's kind of crazy. Maybe you expected it, maybe you didn't. You can rewind back to February. When we set this up, I actually drew that whole move and actually drew the target for the bottom on the chart. I had a target right there and we smashed it. Crazy enough. And see, that's where this target right here comes from. And if we escalated, down here, not quite all the way down, but that's down there is where we could be heading if we really escalated things. You're like, no way, we take back all the way back to 2022. That kind of thinking, we can't do a big correction, is what gets you in trouble. So 8% of the entire market cap of the S&P 500 right now is right here on this baby. 8%. This one single stock out of the S&P 500, 8% is NVIDIA. That's crazy. That's why I took a look at RSP, and like I speculated, if we take RSP, which is an equal weighted S&P 500 managed by Invesco, if we ramp this baby up here, possibly even here, I might be the top. So this is kind of a chart to keep an eye on right here. I know when things are potentially fully cooked. Right there and right there. All right. Looking back at small caps. This thing's a monster. We're probably going to go out higher. Look at this. Probably going to the target. Broke above. Absolute insanity. Couldn't do the bigger correction. It's kind of void now. Like, still potential to do it, but this is more likely to go up here than it is down at this point. Oil. I'm just looking at monthly charts too. Oil, what do you think? Right down there. Highly likely. Be great if we could close, like if we push that back down and close the month underneath that support right there. Be interesting. Looking down at the daily charts, we're just kind of stuck in this range right here. Stuck. We had a big draw. There was a big draw on oil, but this is just a correction right here. There, move down so far. 1, 2. We're probably going to push up for another couple days and then push down again. This is being a slow mover. Thing is, oil's slow mover for a long time, and then all of a sudden it breaks free and goes fast. Gold, man, that was down earlier. Now we're pushing back higher. We're down a bit. Now we're coming back up. Down overnight. Very quickly pushing back to the top of that range. Now looking at what we've done the past few days. We were up here early in the month. Took a trip down. We retraced. We're in this danger zone right here. First move down. Next move down. Right there until still convinced, like this is high probability stuff right here, that we're probably going to get the continuation. Now we did close above the 618, so it starts tipping the odds we're going higher. We're still in this potential zone reverse. It's kind of a coin flip right there. So if we're going on up, the target right now, 35.58. If that fails, probably going down here, 32.80. Bitcoin. Morning, Laura. Morning, Jason. John. Bitty bit Bitcoin. Bitty bit Bitcoin. Well, I mentioned I wasn't sure that that low was going to stick. Anybody remember that? My reluctance. Really looks like we need to reach down and hit that to me. That's what I think. Then we'll see what happens. Do we hold it? This correction right here could dip all the way down to this level here and still bounce. That's the downtrend of those highs. Remember that? Talked about that back here. Had that cooking back in May, June. Broke through it in July. Now we're going to back test it. Now, this could be a powerful pattern here. Back testing a downtrend of highs and holding. That can be powerful for an upside. But if we break down below it, that's a big sign that this game is over. The bullish game on Bitcoin. Potentially over for now. So be very cautious about what happens right here. Talk about that more on Monday. Ethereum, Ether. Not doing the bullish move I wanted to see here. Right back down to the bottom. I want to see it hold this. Like, I don't want to see this get below this orange box. If we do, probably going on down. Back below 4,000. Kind of wanting to see this pop. Right now, we're not doing it. It's a warning sign as we push through the low we had a couple days back. Now, crypto known for pushing extremes and then flipping right around, so be careful. Just because we push down in here doesn't mean we're going down, but it tips the odds we're probably going to go down. So it's a bummer to see. I was very optimistic we were just going to rocket ship out of here, but nope. Suck them in and rip them. So three-wave correction off of that high. Seems to be what we're doing since we just pushed to a new low. A, B, C. Right there. And then that voids the potential setup to go higher and bust through. So then we'd have to set up a new thing. NKD pushing down. If we can stay above that high from last summer, upside. If we get the close down here today, below that, we're probably coming back to the box again. Box has been where we topped out for months. Look at this. We broke out of it, back tested it, shot up here, ran out of juice, breaking new highs, and might have to come back down and retest again. Dollar still set the grind down to the target. Choppy B wave looking action right here. Although A, B, C, or maybe that's A, B, A, B, A. Ugh, getting choppy. That's definitely corrective looking. So let's see. Do we pop down in here and then go higher again? Or do we push it down to that trend line and keep establishing the downtrend with a lower low? Don't know. That's why I'm not trading it. Apple still grinding in here. Can this break out of this funk? Or do we hit the 245? ABC? A, B, C. A move, B move, C move right there. If we stop right there and turn down, can be just as bad as that move right there. Look at this. This started before Trump took office. We started this down right there. These corrections had nothing to do with Liberation Day. Microsoft over here, look at it. This correction started last summer. It continued through Liberation Day where we wrapped it up, and then boom, 62% higher. NVIDIA, when you look at this one, we kind of started chopping back here in November, retested in January, pushed it all the way down quickly, and then we're up like 100% off of the lows there. Pushing back down, probably need a correction here. Like this probably needs to come back down, retest the breakout again. Revisit the daily roadmap line. This thing went up 112% off the Liberation Day lows there. Extra spicy. Amazon, if we can break through this gap down zone, set for 257. Google, if we can, oh, we already pushed out. We closed out yesterday, so 220, 230 upside targets, highly likely. This one had the chart pattern for getting a bigger correction, but has proved otherwise at this point. Probably going up 220, 230. It's pretty good. Meta, probably if we can hold, well, probably nothing. If we can hold this breakout line, this is what I was talking about on Microsoft. If we can hold this, or NVIDIA, I guess it was NVIDIA. I was talking about the breakout. We can hold that breakout, potential to go higher. We already hit that 75% likely. 70% if we can hold it and go higher. Right there. If we start back down below these, this resistance here, we're probably going to come back to here at the minimum, if not here, where you see how that kind of was resistance, support. So if we get below that, probably test this zone, and if we don't hold that, we could come on down deeper on Meta. Microsoft, we shot up 62% to the high, retesting this fib line. If we get below that fib line, this fib line, then retest the breakout, which kind of like similar to NVIDIA, the daily roadmap line and the breakout level in the same vicinity. So we could see this drop the soap in the shower and fall out of bed real quick right there. So NVIDIA supported that. Well, we just ripped through that fib line, so there's not really much there. So it may rip right back down if we're going to experience any kind of correction. Tesla, we broke out, but we haven't got the continuation yet. So we had this big squeeze thing here. Talked about this yesterday. Popped out, retested, popped out again, a little higher high. If we go, typically on this pattern, we would go the width of the mouth, which is that high right there. That put us up here around 450. We'll see. Doesn't have to do anything. The impacts today. The major impacts are the end of the month today. Payday, retirement accounts getting money. Options will start taking out Saturday, Sunday, Monday's premium starting about noon today for next week. So you'll see a rapid decay starting starting on Monday, because they're going to take out that whole weekend, 3-day weekend premium. So when you open on Tuesday, there's no change in prices. Everybody, it's funny how many sales promos I've heard over the years. They're like, "Oh yeah, get in on Friday before a 3-day weekend. You know, sell your options right there. That way you get all this bonus decay for the, get in right before the market closes. That way you have this bonus decay by Tuesday on the 3-day weekend. You get this giant big decay." Well, it starts on noon and it rapidly decays out. Now they don't decay out the full amount. You'll see some rapid decay early Tuesday to bring it back into parity. They kind of they split it somewhat like 60, maybe 66, 33, maybe more like 70, 30. You see 70% of the decay occur here, and then you get the last 30 by noon on Tuesday, unless something crazy in the market happens. That setting up for potential downside on Netflix. All right, I go pull gainers. Looks like this one was a gainer and now not. Whew. I go pull decliners. Things moving $2 more down. Usually I hunt for opportunities here because that stuff making a pullback. Oh, guess what? AB. This one potentially going on down. Starting on the path. Caterpillar getting whacked a little bit, not much. Might come back to the roadmap line. Of course, we didn't touch the 445 target, so it may just be back testing the breakout. This breakout zone right here. May just be back testing yet again before we push higher. Still back to the roadmap line. In VLL, getting whacked. It's a big gap. Hey, that was down overnight and right back to it. Look at that. I've been bullish on Gap, in case anybody hadn't paid attention. Look at that. See that spike down right there? I had all sorts of alerts going off last night, and then boom, we open up like nothing happened. Love it. Speaking of, Robinhood's going off like crazy. I can hear it in the background. So, in case anybody didn't know, I've been trading Gap put options pretty aggressively for a few weeks now. Making some money in my 50K challenge account. I had 18 strike puts sold. Looks like those are going out for full money. Cha-ching. The DJT had $20 calls sold against the 1,200 shares I got put a couple weeks ago. That looks like it's going out for full profit. Probably roll that out a couple weeks. Looking for that pop right there. Let's see, Docu, another one I've got. Oh, that looks pretty nice. Coming back up off the potential. So this is where typical proportions for an A, B, C would push it down here. But the only thing that has to happen is a low lower than the A. That technically could have finished that pattern right there. How do we know it's done? We'll break back above this right here. We get back above that 82 area. We're just rounding off. Probably going higher. The next move up puts us all the way up here, potentially 115 for Docu. Not bad. Chewy, another one that, looky here. I had the 41 strike sold for today. Now this could be an ABC, and we could be on our way up. 51. Some new stuff I was looking at. SUN. I may sell something on this next week. I don't know. 11. We do have support down to 10. Upside on this one. Up here around 30. So be careful. Be careful. No, I've been pretty bullish on. Look at that. If you got lucky and hit the, I mean, we hit the targets yesterday. So if it was a short-term trade for you, time to get at GTFO. If you're longer term like me, I just got one share at this point. Sold the options on that kind of wall we hit back there. And yeah, we're close to the bottom of the initial target. So after we hit this target right here that I've had on the chart for a while, we may experience a period of kind of rest. Now, it could just rip on through. So just be aware either way. Like that would be a pretty major reversal off the low that we set back here. And we may experience that rest period before we can go, got to build back up the energy to go substantially higher again. TSM. Still looks like we're heading down to the roadmap line to me. So I brought some stuff that has setups today. Oh man, that looks like it might break down. My signature roadmap bounce pattern. The one I've been talking about with the orange line and the bouncing and all the stuff. So there's that one, $10. Low price stuff, not as keen on. Box. I don't know what that pattern is. Yeah, I know why my tool picked it up, but I wouldn't touch that. I wouldn't trade that. I just wouldn't, like, it may work out just fine, but I'm not gonna touch it. I don't like the way the price chopped around there. This one, much more clear. Popping up, retracing, pushing higher, 115.95 right there. Statistics on this baby, yeah, not very much. CLOU. We've got the high, we got the low, we got the entry, and 24 for 22 right there. Matador. Resources. Very small little bounce here. That high, this low. Zoomer up, Buttercup. There we go. Entry right now, 54 target. Statistics suck, but that's what we got. Rivian. Equal opportunity trader here. Here's the high, here's the low. There's the move above and 15 targets, or 14.96. And the Stratasys. Hey, big politician buying a bunch of these. Here's the entry, 12.94 targets. Could see that rip higher. Am I streaming Morning Monster? I'm doing a crypto special, Ryan, as I hopefully everybody heard me say that like 4 times already. So I'll be live crypto special on Monday, as I do every market holiday. Look back in the history. So bias for the day, looks like we're going to retrace a little bit. So we're giving up the... So if we get through the 15-minute, that played out. We got the high. What would I expect? Let's run some numbers on the expectation for today. We'll wrap this up. I am live on Market Masters by myself today. I'm going to be creating an indicator for time-based entries. I've heard this for years, that if you just buy SPY on like Friday afternoon and you sell SPY on Monday, there's like a 70 or 80, 90% chance you're going to make money. We're going to test that out. We're going to create an indicator. So if you, let's see if I can find the link here. If you want a reminder for the Market Master show, the link's already in Discord, like you can find it. But if you want to sign up to get a reminder right there, Market Masters, you can come sign up, get a reminder when I go live on Market Masters. Jack is out today, so Good Lord. I don't know if y'all heard that, but it sounded like one of my local buddies pulled out of the gas station across the street and floored it and went about 3 feet per hour until he got going there. So retracing right there. If we get below that 15-minute, that's probably where we're coming, right down here to 6,400 area. If we get below that, well, activates another 100 points down. That's what we got cooking today. I'll see y'all on Monday. If you come join me. If not, I'll see you on Tuesday when the market's open again. Have a great day. Have a great weekend. Enjoy it. Cook something. Enjoy the last bits of summer here in the Northern Hemisphere. In the Southern Hemisphere, get ready for summer, I guess. Have a great day.